Janet Yellen spoke before the Senate Banking Committee today, defending the Fed's cautious outlook on rates due to global risks caused by, you guessed it, yes, the potential UK exit from the European Union, but also a U.S. hiring slowdown. As investors wait and watch, should they dive in, especially as we head into summer and Camp Bumpy? That's what our next guest says you should expect. There are ways, though, for you to make money over this summer. Let's bring in Brian Belski of BMO Capital. Great to see you, Brian.
Thanks for having us.
Camp Bumpy.
You like that?
Is that fun?
No, it's not fun.
Are there mosquitoes there?
There are mosquitoes there. Summertime. No, I think, the American public does not like uncertainty. And I think we're going to have an uncertain summer. Brexit, schmexit. We think, for all intents and purposes, we can't really believe polls. Let's see what happens. We think that calmer heads will prevail, actually, and for it not to happen. But at the end of the day, that's going to cause some volatility. And that's why the Fed's going to remain more defensive, as you heard our comments today. We still think that this all comes down to the Fed and about economic growth. And as you talked before we started to talk, companies remain very defensive, and they're not going to put capital to work quite yet. So why would they?
Okay, so let's put people's capital to work who might be watching. Let's say it is Camp Bumpy, and you've got the real bumpiness that you're talking about in volatility. Best place to put your money for the next month or two over the summer.
We love consumer staples. What do we do in America when we're worried? We eat and drink, right? And I believe...
And brush our teeth.
And brush our teeth. I believe that we're going to be doing a lot of eating and a lot of drinking in front of the boob tube this summer with respect to not only the election, but the process to get to the election.
Well, so in the spider with consumer staples, you've got Procter & Gamble, Coca-Cola, Philip Morris, Altria, Walmart, names like that.
Yeah.
Could you buy just the individual names?
Yeah, we think you should. We like stocks more than we like ETFs because at the end of the day, we think we're entering a period of active investing, Liz, where we want to own stocks, we want to own portfolios that are more concentrated because we actually do think that we're heading into, and we're still in a broader bull market. It's just this 15 and 16 in terms of 2015 and 2016 is a transition year as we move out of quantitative easing strategies and toward more fundamentally led strategies.
Well, let's just say people don't think they're in for bumpiness and they don't mind either way. What would you advise?
Financials, technology, and consumer discretionary, because we think financials are the most feared sector in the world, that people are jumping to judgment.
They have not done well.
They have not. Consumer discretionary, because what do we do in America? We buy stuff. And technology, really, for all intents and purposes, is really the growth engine in terms of integration and innovation and cash in our country.
You worried about what happens Friday and a headline of whether to remain or leave the European Union for Britain?
I'm worried about the fire, aim, ready type of atmosphere from clients.
Right.
It's all short term. Nobody does research anymore. We always react, and we are much more fundamental. We think we will. If we do have a Brexit, that will be your buying opportunity after calmer heads prevail, kind of like August of 2011.
You listening to Yellen right now? I mean, she came out today and admitted that low rates could cause people to go into yield where it's dangerous territory, especially for retirees.
Yeah, but it's already happened. I mean, it's already happened with respect to
I know.
equity.
Why did she say, oh, I'm worried about that? It may happen. What do you mean it may happen? It's happened.
Well, we did an analysis of looking at utility stocks, Liz, and they are the most...
Which are high dividend payers.
Right. High yield payers, and they are right now from a price performance basis the most extended they've been in several years relative to how much yield has gone down.
So what is she talking about?
Well, she's talking about, for all intents and purposes, really since 2008, people have been buying fixed income vehicles for the wrong reasons.
Right.
For price performance, not for fixed income.
Great to see you, Brian Belski of
Nice to see
BMO,
you.
a good friend of